Welcome to Illuminati Silver. We tell you the truth about silver. Today is Tuesday the 30th of July 2019 and we are once again talking sterling and why it's falling yet again and may continue to do so, which is great news for gold and silver prices in pound terms. A little over 2 weeks ago, on the 12th of July in fact, we produced a YouTube video entitled Sterling Tumbles This Week and Gold is £55 off its 2011 high, in which we address the fact that since the UK held its referendum on leaving the EU on the 23rd of June 2016, we have seen sterling's value fall. And that particular week, sterling tumbled 0.6% to $1.2443. Its lowest since April 2017, but it did recover just a little to $1.25. At the same time, gold stood at £1,127 an ounce, just £55 off its 2011 high, and silver stood at £12.13, some £13 below its 2011 high, but still rising quite nicely. We concluded that video with the words, quote, "Whilst we are not necessarily buyers of gold in sterling at this level, we still do not think it's hugely expensive, and is likely to rise further over the coming months, almost regardless of what it does in dollar terms, mainly the consequence of sterling devaluation," unquote. Well, 2 weeks later, we have seen sterling fall even further. It currently stands at $1.22, some 3 cents lower, and gold is £1,171, £44 higher, and silver is £13.52, almost £1.40 higher. Yesterday, we published another YouTube video entitled Gold Soon to Reach Its All-Time High, in sterling that is. Now we provide links to these in the description below, at which time gold stood at £1,153, just over £20 below its all-time high. Now, and today, we are in single-digit figures from that goal. We concluded that video with these comments, quote, "So are we going to see gold in sterling terms break its previous record? You bet we will. The ramifications of a hard Brexit have not hit home yet, and we see sterling suffering further. Add to that the fact that gold generally may have a little uplift because of lowering rates, not as much as the pumpers are expecting, but a raise nevertheless. It is almost unimaginable that we shall not see gold burst its UK record," unquote. Well, it looks as if this may be achieved this week, but have no doubt, even if it doesn't, it will reach beyond £1,180 very soon. We've often been accused of attempting to talk precious metal prices down, and to some extent, in dollar terms we have, because that is how we have seen them moving. However, our stance in sterling terms has been very different, as we have always thought that the weakness in sterling would more than outweigh the strength of the US dollar, thereby ensuring gold and silver prices will rise in those terms. They still have further to go, and tomorrow we shall see how the Fed's interest rate decision and comments affect the dollar price of gold and silver. We suspect the Fed may be a little more cautious than the markets wish for, that is, reducing rates by 0.25%, yes, but stating that the economic outlook is still moderately good. But we shall have to wait and see. The one note of caution we shall give to those who purchase gold and silver in sterling terms is that the position could quite quickly reverse, especially if a hard Brexit looks less likely to occur. For example, if Boris Johnson, the Prime Minister, does manage to do an agreed deal with the EU, or that Parliament in some way manages to intervene. But failing that, there is still more mileage in a weakening sterling, possibly even down to $1.18, and therefore strengthening gold and silver prices. Stay tuned for more updates. We hope you have found this video interesting and informative, and if so, please give it a thumbs up and share it on social media. Please ensure that you have subscribed to our channel and press the bell sign so that you are notified of any future videos. Also, kindly visit our website at illuminatisilver.com, and if you haven't already done so, please subscribe either as a free or paying member for regular email updates and offers. Disclaimer: Illuminati Silver owners come from a background of banking, international wealth management and economics. Having now retired from these worlds, we are not qualified to give investment advice. Therefore, this and other productions must not be deemed to be giving such advice and merely represent the personal views of its owners.